Looking at Facebook on the daily, weekly, shorter term time frames using a backup mic so aware it sounds different for the time being. But Facebook had a bearish break of the inside candlestick, and the bulls did buy that dip. So we have key support now. The low we've seen this week is 118.51, and we did get a lower low today, but only by a couple pennies, 118.48. And the bulls bought that dip and closed up near the high of the day. So if we see a green day, we will confirm it is a bullish reversal candlestick. Resistance is 119.20, 119.77, and then 120.36. And the bulls really want to regain this 200-day moving average, turn that into support. We can see we are still maintaining the higher lows from the bounce back to start December, but it's also still maintaining lower highs from back at the start of November. So the weekly time frame had an indecision candlestick last week, and we have such a tight trading range and low volume this week that we're not really getting much information on the weekly time frame. What we do see is we are still rejecting from the exponential moving averages. This now makes 4 of the last 5 weeks. The 50-week moving average support is down at 117.38. That's going to be a key level, but we aren't close to testing that yet unless we do break to lower lows this week. So Facebook has, the whole market really is seeing really low volume, really low trading range, and in an environment like this, it really just stacks the odds against traders even more, as if we needed that. But trying to force trades in low volume and low volatility can certainly lead to losses. So I certainly wouldn't suggest forcing anything, and if you don't find any trades in the first hour or two of the day, that's when a lot of traders are taking off because the volume completely dries up, and it's really a self-fulfilling prophecy where the more traders take off, the less volume we see, and the more traders take off. So looking at the shorter term time frame, it's certainly good to use as practice. If you're sitting at your computer anyway, might as well be watching the market and some patterns. And we had a pullback on Facebook first thing, a bounce and a rejection from the 200 period 5-minute resistance, another pullback, almost a double bottom, 118.48, 118.50, another lower high rejecting from 5-minute resistance. So we've yet to close over the 100 period resistance. It's rejected both bounce attempts so far. Another higher low, another rejection, and then the bulls turned the 100 period into support for the first time today. And on that same candlestick, they broke the lower high pattern. So that was your signal right there. It happened on increasing bull volume, and it happened at just after 1 p.m. Eastern. So there's your bull signal. From there, we went from about 118.90 to the high of the day up at 119.20. So you say big whoop, 30 cents. And there was a trade to be had there on weekly options, but you are right, 30 cents. Big whoop, and that's because of the lack of volume and volatility. So even when you do get a clear break, it's hard to make any significant gains to the upside when the price is not really making much movement. So we then pulled back and held that 100 period. So this lets us know that this 100 period 5-minute is a key level to be keeping an eye on tomorrow. After all those rejections, and then it held as support at the end of the day, lots of play around this moving average. So the hourly time frame, we've got the 20 period moving average driving the price down a bit, but we did try and close just above that at the end of the day, and that level is 118.98. So that will be support. We'll have to see where it starts out tomorrow pre-market, but we can see a very clear lower high pattern here that the bulls have to break if they want to turn things around and try and recover on the daily chart and recover that 200-day moving average resistance. So the bears are still in control of Facebook. It did form a bullish reversal candlestick on the daily time frame, and it held that middle Bollinger Band daily support for the 3rd day in a row. So we need to see a nice solid green day, ideally closing up over 119.77, which again was the high of yesterday. That would be a nice strong confirmation of the bullish reversal candlestick today, and have our sights set on that 200-day moving average next. So bears still in control. The bulls have to prove themselves by breaking this lower high hourly pattern. We'll see if they can do it tomorrow, and we'll check back in.